You know what, when you take away all the headlines for the perfect day, I'm thinking like right now, just stay out of Europe, especially the financials. Commodities, long-term view, I don't care what's going on today. I'm bullish on commodities. And I would wait to see what happens in America. We're not as far down the pike as Europe is, but consider the fact that we have our own problems. I would stay away from the equities altogether and look more toward the commodity space only because of China.
What do you think actually turns out to be favourable in this environment for commodities, the fact that you can stay that bullish on commodities?
Well, look, you know, last week, copper dropped, what, 15%, and it had really nothing to do with fundamentals. It was forced selling due to margin calls and equities, short put positions that people had to cover. Today, on the other hand, we saw a close of copper being down 7%, which was astounding. I'm not much of a conspiracy theorist, but I do believe somebody has the PMI numbers somewhere behind the woods, because I'll tell you what, there was a lot of Asian selling into the close. Okay,
so short term, do you think that continues? Longer term, what's the picture and what's the difference?
Yeah, well, short term, if you can stay in cash, I would stay in cash, because it's just it's a roller coaster ride. But the fact of the matter is, I do believe long term Chinese inflation will slow down. It's a little bit too high right now. They have a currency that's undervalued. They have infrastructure needs. I do believe the commodities long term are the safe place to be. Maybe not today or tomorrow, but in the next 12 to 18 months, you should be in the commodities compared to anything else.
But yeah, because, I mean, in terms of market sentiment, and here we're very sensitive to inflation numbers in China. We want the inflation to come down, but with that, there is the realisation that they're actually trying to slow the economy. How can you kind of remain bullish about commodities knowing that they are slowing things down and the demand will actually pull back, won't it?
Yeah, that's a tough one, because we're all hoping and betting on the fact that Chinese inflation will drop, therefore causing China to relook at their policy and actually lower rates, which would cause all kinds of good things to happen out of China. But you're right, we are leaning on one simple fact, that Chinese inflation should drop. If it doesn't, all bets are off, and who knows where the dollar will stop.
Yeah, hi Larry, this is Peter joining you in Sydney. Just a question on copper. I mean, you spoke about it and it's very interesting. We watch copper very closely. It's called Dr. Copper, the key indicator of growth. And to me, it seems to have a floor at around that $3 a pound level, and it looks like it's coming down to test that level. What's your price target, I guess, on copper? You know, given what we've seen, given the extent of the decline, but underpinning that, we haven't really seen an increase in LME stockpiles to the extent that you would expect.
Yeah, no, that's a great question, because the fact of the matter is there's still a lot of stockpiling, and the Chinese can afford to live hand and mouth. $3 does seem to be the new floor, but keep in mind, today in the U.S., I'm not sure what will happen with you guys today, but in the U.S., we dropped like a rock in the afternoon, and it was forced selling from Asia. I still believe it was a farce, and somebody has these PMI numbers, and they're very concerned with the economic situation in China. But $3, we're all talking about that. We're going to see a lot of demand support at that level.
Yeah, and just on that, I mean, your views in terms of China, I'm going to have a discussion later on about the bulk commodities, which are very important to BHP, Rio Tinto, the composition of some key mining stocks in Australia. Do you have any view in terms of bulks, particularly iron ore and coal? I mean, China's very sensitive. They're the key marginal buyer for our commodities. Do you have a view in that area?
Yeah, that's funny. I just talked to somebody today about that, and just with the vast amount of infrastructure needs that we as Americans do not see as much in China, we think like as copper goes, so will the market, and that includes zinc, iron ore, and lead, etc. So copper being the drag right now is going to bring everything down. If we see copper go back up to 350 to 370 a pound, which is very likely in the next 2 or 3 months, especially if they lower rates, we'll see the rest of the bulk commodities go right in suit with copper.